Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin, guys. And today I'm coming with you guys with another video. Right on this video, I'm basically going to be trading on the lower time frames, or showing you how to capitalize off of the power of three method with the lower time frames. Right, this is what you have to understand when you're trading on the smaller time frames with the power of three method. What you have to take into account is truly what's going on the higher time frames, but still understanding that whatever the trend is on whatever time frame that you're trading on is a trend that you need to follow, right? But still take into account, like I said, the higher overall higher time frame trend. Okay. So when you are on these lower time frames and you are trading on these lower time frames, understand that sometimes these trends that you may see on the smaller time frames may not last as long as the ones that are on the higher time frames. All right. So let's put it in perspective, right? Let's put this into perspective. Enough talk, right? This is how it will look. Right, as everybody knows, you have three key areas of values. You have your fair value gap, you have your order block, and you have your structural zone. All right. Um, Everybody knows, if you watch my previous videos, right? Trend starts with patterns. All right. The first pattern we see here is obviously a double top pattern, and it's at a key level of support and resistance, right? Or a key structural level. We like to call this the whole level, 1.40, 100, right? Price stopped at that level. It created a double top. That's keys to let you know that price is looking to head into a downtrend. All right. So you have the double top. I'm gonna draw them out. Right. Right. Double top. Then you have your triple top. Right. And then your last one is your head and shoulders pattern. Okay. Head and shoulders pattern. Right. These three patterns start a downtrend, or they can be continuations within a downtrend. All right, we got that right. Now, how are you able to identify what type of trend you're in, right? Just sometimes all you have to do is just take a step back and see what the directional bias is within the market, right? Um, this is a downtrend. This is how it works. It creates lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? And at each of these lower lows, right, once price surpasses that level, that gives you your break of structure, creating your new low. If price retest, we want to see price retest back above this previous structural level, which is the break of structure. We want to see price retest back above that to touch one of these two areas of value, whether that's an order block or a fair value gap zone, right? Sometimes price will come back to structure and respect it and then continue to go down. But we want to find, for the most part, price coming back to one of these two levels. All right. So let's go to it, right? Let's go straight to it. Let's look at it from where we are now on a 30-minute time frame. All right. So we got price, like I said, creating a double top, right? Structure has broken here. It took out the neckline and it created this new low. Now, when that happens, right? When price breaks structure here, right? When price breaks structure, all right, we're looking for price, like I said, to create a new low, and then we want to see price retest back above this previous break of structure. And we want it to find either a fair value gap or an order block. Now, in a downtrend, right, you want to find the last up candle before price decided to break structure. All right. That will be your key order block for a downtrend. It's the last up candle before price cleanly broke structure. All right. So that gives your order block. Okay. That's your order block. Now, what we want to see from that level is we want to see price close below with a bearish candlestick, whether it's this one or this one. It doesn't matter. As long as you get a candlestick that's closing beneath your order block, you can actually take action. All right. That's your confirmation. So it'll look something as similar as this. All right. Let's say I look at here and let's say I at least have like a 40 pip SL, right? If I have a 40 pip SL, I at least need to have a 40 pip gain. All right. That's what I'm aiming for. That gives me my 1-to-1 risk to reward ratio. Now, if I want to go for a 1-to-2, right? What's 40 plus 40? 80. All right, that gives you your 1-to-2 risk to reward ratio. And as you see, right, it took time, but price found its way to actually go and hit your 1-to-2. All right, if you just simply went for a 1-to-1, you would have hit your take profit, money would have been made, you going about your day, right? Cool. What I want you guys to understand is what happens next is this is a level of structure. All right, this is a level of structure. Price broke it, created this new low as well as this other low here, right? So what ended up happening is price pulled back up, back above the previous break of structure, right? Which is BOS. Okay. Price pulled back up. And what did it find? It found the deepest last up candle before price decided to break this level of structure. All right. So what happens? You could have got your 1-to-1. Price would have broke structure here, retested back above your break of structure. Boom. What do you end up getting? You end up getting bearish candles continuously closing below your break of, your area of value, right? Could have entered here, could have entered here. Either or would have been fine, right? Let's say you would at least have a 30 pip SL. You at least need to have a 30 pip gain, right? That gives you your 1-to-1. Money's made. You go about your day, right? Now, price ends up doing what? Breaking this level of structure, right? And because it broke that level of structure, it keeps breaking to the downside, meaning that price is looking to continue to go toward the downside. Mind you, we're on a 30-minute time frame. So, you still being able to attack it as if in my previous videos where I showed you on a higher time frame, you're still able to do that on a lower time frame. All right. So you get your breaker structure, price creates the new low, right? When it decides to retest, right? Again, we want to find the deepest last up candle before price breaks structure. And or you can find a fair value gap level. And I'll show you what a fair value gap level looks like. But for the most part, right, we are seeing price retest back to these order blocks. All right, last up candle, the deepest last up candle before price cleanly broke structure. Price retest back to that level. And again, all we need to see is bearish candles closing beneath this level. All right, entry SLs can be about what, 25 pips. And mind you guys, the lower the time frame, the lower your SL could be as far as pip goes, right? The higher the time frame, the higher your SL is going to be, and the higher the take profit is going to be as well, right? So you got to take that into account as well. The lower the time frame, the lower the SL, the lower the TP. The higher the time frame, the higher the SL, the higher the TP is. Okay, so we got a 40 pip SL. The 25 pip SL. We at least needed a 25 pip gain. Okay, money's made. You go about your day, right? And that's how you truly just follow the market, right? You try to find these areas of values in the market back above the previous breaks of structures, and then you go about it as such. Okay. Now, what does a fair value gap look like in a downtrend, Gary? Well, it looks similar to this right here, right? This is a fair value gap. All right. It was above the previous break of structure, right? So price could have came to this order block, or price could have not came to this order block and strictly just simply just came back to this fair value gap zone, right? Simply could have came back to this fair value gap zone, and this is what a fair value gap looks like. All right, it consists of three candles, one, two, three, and then this candle's wick and this candle's wick does not meet in between the body of this candle, which leaves an entire space there. All right, price could have came right back here, right? Touch this area of value, but it did not give you a bearish candle actually closing beneath. So this fair value gap was not valid. All right. But I just wanted to show you guys what that fair value gap looks like. All right. Now let's go to a whole different pair, right? We're going to go to a whole different pair, and we're actually going to look at an uptrending market the same exact way as we just did. All right. As we just did for the downtrend. All right. So let's go look at an uptrend on a 30-minute time frame, right? And let's go back in time just a bit, right? Let's go back in time. Let's see. Let's see, what pair can we go to? We're gonna GU. We'll look at GU for a second. All right, cool. This is cool right here. All right, so same thing applies as if it did with the downtrend, but it just flips. Okay, it just flips. That's the only thing that happens. So, give me 1 second. A little bit better here. Let's see again. We're gonna go to gold. We'll go to gold. All right, so we'll start right here, right? Again, same thing applies. You have your areas of values, fair value gap, right? You have your order block, right? Works on every time frame for every pair, right? You just have to follow the trend that you're looking at, right? So just take that into account. Nothing changes but the time frame, nothing changes but the pair. All right, everything else stays the same. All right. So how do we know that we are moving in a uptrend, right? If we just take a step back, which directional bias is the price going? It's going up, right? So, right, here's your uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Right? That's your uptrend, right? And once price breaks structure, we want to see price create a new high and we want to see price fall back beneath the previous break of structure. All right, we want to see it fall back beneath because then what it's going to do is it's going to find an order block or a fair value gap for an uptrend movement now, right? If price can retest back to those structural levels, what are the structural levels? The structural levels are basically the levels where price is giving you the BOS, right? Those are the structural levels you want to see price retest to sometimes, right? So let's go from there, right? We understand that. Now, what do we see, right? Price taking out a structural level. All right, that gives you your what? Your BOS. Breaker structure happens, price creates that new high. And again, we want to see price retest back to, right? In this case, it's the last down candle before price breaks structure, right? We want to find some of the last down candles before price had broke structure. So right here, right, this is one of the last down candles, right? It's a doji candlestick, one of the last down candles before price cleanly broke structure. All right, price came back to this level, created a double bottom, right? Remember, I told you now the patterns. Let me mark this off right for you guys, right? The patterns in this case will be double bottoms, right? You have triple bottoms, right? And then you have inverted head and shoulder patterns. All right. These are the three patterns to show you that price is either going to start an uptrend or be a continuation within an uptrend. All right. Those are the three patterns. That's how they look. All right. Let's take a step back. Now let's go back here. Again, you see the double bottom formation. It's not going to always look as perfect as I had it drawn, but this is a double bottom at an order block level, right? So you have to take that into account. That's continuation now. So now that we see that, all we need to see is a bullish candle, right? Instead of the bearish candles, we need to see bullish candles now closing above our order blocks, right? Or our fair value gap zones. What does a fair value gap look like in an uptrend? Here you go. It consists of three candles. One, two, three. We see this candle doesn't have a wick, and this candle's wick does not touch this body, right? Which leaves a space within the body of this candlestick. All right. So you have an order block and a fair value gap right next to each other. That's extremely strong, right? And we want to take that into account. It'll look something like this, right? We want to see bullish candles closing above. We got a bullish candle closing above. We want our SLs beneath, right? And then now we want to go for at least our 1-to-1 risk to reward ratio. Okay. 1-to-1 risk to reward ratio. Money's made, you go about your day, right? What ends up happening? Price ends up breaking structure here, right? We get a clean break of structure. Price creates this new high, right? And it retests back to where? It retested back to a level of structure in this case, right? From here to here, right? You have your level of structure. Price came back here. It respected this level of structure, right? As well as a fair value gap here. If you zoom in, you'll see these two candles wicks don't meet in between the body of that candle. So that gives you a fair value gap level. Is this the fair value gap level that we normally would want to see? No, but we got to understand it's two areas of values in the same place. Usually you would want to see your fair value gap be touched beneath the previous break of structure. That's what you would want to see in most cases, right? But we see how price is respecting this structural level here, and we see how we got bullish candles continuously closing above. So the moment that we could have got a good engulfing candle like this one here, where it surpasses this bearish candle, we could have took our entry, right? SLs go beneath, and now we're aiming for our 1-to-1. All right. Aim for your 1-to-1. You see price touch that 1-to-1 risk to reward ratio. All right. And understand, guys, when you're taking these trades, none of these trades are obligated to go straight to take profit. Sometimes you may deal with drawdown. Sometimes price may go into profit, come back down into the negatives, and then go back into profit. You got to take all of that into account, guys. Right? Thinking that you're just going to enter a trade and it's going to go and hit your take profit. That's not that's not what the market does. Right? Sometimes it does. Sometimes it doesn't. You just have to be patient. Patience is extremely key when you're entering into these markets, and you got to be disciplined and consistent with what I'm showing you, and you know what time frame that you love to trade on the most. All right. But with that being said, guys, I hope you guys enjoyed this video. It's your boy Gary Scott, aka the Solid Pip Assassin. I'm out. Peace.